Have you ever heard anyone say that you should donate money to charity towards the end of the year so you can save money on taxes? Well, this is a huge misconception that I keep hearing again and again. Although you might pay less in taxes by donating, the amount that you save is not greater than the amount that you donate. And in this video, I'm going to go over exactly how this works so that you understand and are not repeating the same myth to other people. Let's go. Hey, this is Carlos with Influential Finance, and on this channel, I make weekly videos to help you improve your personal finances. So if you're new here, consider subscribing. Now, before I start, I just want to get one thing out of the way. By me explaining to you that you don't save money in taxes by donating does not mean that I am telling you to stop donating money. I'm only educating you so that you understand how taxes work and are not donating for the wrong reasons. I donate every month to causes that I care about, and I believe that everyone who can should as well. So with that said, let's jump into it. So reason number one why donating money doesn't actually save you money in taxes is that you can only deduct charitable contributions if you itemize your deductions on your taxes. So right off the bat, if you don't know what itemizing your deductions is, you probably don't itemize your deductions. Only about 10% of Americans actually itemize their deductions on their taxes. So only about 10% of people actually might be able to take advantage of this deduction. So to give you a brief explanation, on your taxes, you have your standard deduction and you have your itemized deductions. You can take one of these two deductions on your taxes. Most people take the standard deduction. The standard deduction for 2021 is about $12,550 for a single individual under the age of 65. However, the government allows you to itemize your deductions if your itemized deductions are above the standard deduction. If your itemized deductions don't add up to more than the standard deduction, then you can only take the standard deduction. So like I said before, about 90% of Americans take the standard deduction. So by you donating money, there's a high probability that you won't even be able to take the charitable donation deduction. So when considering the standard deduction versus itemizing your deductions, some of the things that you can itemize are the interest portion of your mortgage payments, any large medical expenses, and any donations that you made to charity. If you total all of these expenses and it's larger than the standard deduction, then you can itemize your deductions instead of taking the standard deduction. However, as I've said before, for most people, you will not be itemizing your deductions because most people don't have over $12,000 of uninsured medical expenses, of donations to charity, and things like that. One exception to this that I actually spoke about in a different video is that in the CARES Act that was passed last year in 2020 for coronavirus relief, there was an exception made that actually people who take the standard deduction could take an additional $300 on their taxes. This is the only exception that I've seen to be able to deduct charitable donations without actually itemizing your deductions. The second reason why you don't actually save money on taxes by donating to charity is that the amount of the benefit or the amount that you save in taxes is not greater than the amount that you actually donate. So I'm going to put some numbers on the screen just so that you can follow along. So for this example, let's say that you're making $100,000. Out of your $100,000, you choose to donate $5,000 to a random charity of your choice. So this $5,000 donation that you made, what it does is that it reduces your taxable income. It pretty much reduces the number or your income that your taxes are calculated from, aka your taxable income. So instead of paying taxes on $100,000, you would instead pay taxes on $95,000. So assuming a 20% tax rate, if you were to donate $5,000 from your $100,000 salary, your tax savings would be $1,000. I calculated that by taking the $5,000 that you donated times your tax rate. That would give you your tax savings. So in this scenario, you donated $5,000 to only save $1,000 in taxes. And if you were to flip this around and you were to keep your $5,000 and pay the taxes on that $5,000, you would end up with $4,000. You would end up keeping $4,000 and paying $1,000 in taxes. Hey, if you're enjoying this video, I actually make videos just like this one every single week. So if this is something that you want to see more of, make sure you click the subscribe button and turn on notifications so that you get notified every time I post a video. All right, let's get back to the video. So as you can see, you would literally end up with more money by just keeping your money and not donating it. And like I said before, like I said at the beginning of this video, I'm not telling you to not donate your money. This is not the purpose of this video. I'm just trying to get people to stop saying that you should donate money to save money on taxes. I even hear charities at the end of the year trying to get people to donate by telling them that they'll save money on taxes. And that's just not the case. Like I said, you might pay less taxes, but overall, you do not come out on top here. So from those first two reasons that we've already discussed, the main two takeaways are that one, there is a very low likelihood that you are itemizing your deductions, so the charitable contribution deduction probably doesn't even affect you. And two, the amount that you benefit or the amount that your taxes are reduced by is not greater than the amount that you donate. So you would end up with more money in your pocket if you were to keep the money and not donate it at all. One last thing that I wanted to go over to finally put this to rest once and for all is that a lot of people think that if you're on the edge of a tax bracket, you can donate money to drop yourself into a lower tax bracket and therefore pay a lower percentage of taxes in your total income. And this is also not true. If anybody ever tells you this, they clearly have no idea how our tax system works. Here in the US, we have what's called a progressive tax system. So what a progressive tax system means is just that we apply higher taxes to higher levels of income. So I'm gonna go ahead and put a picture on the screen of all of the tax brackets so that we can talk about it. So on the screen right now, you're looking at the tax brackets for 2021. For the sake of this example, let's just focus on the unmarried or single individuals. A lot of people think that, if you look at the 24% tax bracket, a lot of people assume that if you're between that income range, then you pay a 24% tax rate. And that is not the case. So to give you a very brief example of how our tax brackets work, let's assume that again, that we're making $100,000. Even though we are making $100,000, the 10% tax bracket and the 12% tax bracket all affect us still, even though we're making significantly above the income thresholds that you see here. So what this tax bracket is telling us is that for whatever money we make between $0 to $9,950, we would pay a 10% tax rate. And then we would move on to the next tax bracket, which is any money made between $9,951 to $40,525. For any money that we made between those two amounts, we will pay a 12% tax rate. And then, since for this example, we're assuming that we're making $100,000 a year, we would continue to move down until we hit our total taxable income. But the thing that I want you to get out of this is that when you cross into a higher tax bracket, you don't pay the new tax rate on all of your income. The percentage for that new bracket would only affect the income that is over that bracket's limit, not on the rest of your income. So I hope this video finally puts this myth to rest, because I'm tired of hearing people telling me over and over again that you should donate money to save money on taxes. And like I said before, everyone that can should donate, but that's not the reason why you should, because it's just not true. So as the end of the year is approaching, you might hear people tell you to donate money to save money on your taxes. And if anybody ever tells you that you should do that, you can now send them this video. That pretty much wraps it up for this video, but I've actually let YouTube decide which video you should watch next. And if you want to see the video that YouTube selected just for you, make sure you click the video right up here, and I'll see you there. Peace.